It's time to achieve a work-optional lifestyle. This is Golden Years, a roadmap to navigate retirement with Mark Cordner, powered by Golden Years Financial. For over 30 years, Mark has been helping his clients to and through retirement. Now he's here to do the same for you. Reach out to Mark at 702-258-4455. Now, Golden Years, a roadmap to retirement.
We do appreciate you joining us here today for Golden Years, a roadmap to navigate retirement. If you'd like more information about Mark and the team, really simple. All you do is visit gwfinancial.com. My name is Jessica. I join Mark each and every single week here on the podcast, and we're here to educate you and give you that information that you need and hopefully kind of settle some of those fears when it comes to planning for retirement. And speaking of fears, I got to bring up his name, Trump. Okay, I know we're tired of hearing it. We're tired of seeing it. Some of us are, some of us aren't. But the so-called Trump tax cuts that were signed into law a few years ago, back in 2017, they're set to expire at the end of next year. That's, of course, if Congress doesn't act. If they don't, this means we're going to see higher individual tax rates. We're going to see lower standard deductions. We're going to see lower estate tax exemptions. So, Mark, we've been warned. What can we do now in case this comes down our way?
Oh, my, there's all sorts of things we can do. And this is a topic I love to talk about because the reality is when I do public events, educational classes, for example, at the college, we have almost complete unanimity on this idea that tax rates are going to increase. Now, we know that the current Trump tax cuts, as you call them, are going to expire here at December 31st of 2025. They're going back up January 1st of 2026 to where they were previously. It's an increase. But the truth is, when we just look at the math of what the government's doing, we know that it's not only a political issue, but there's an absolute mathematical certainty that rates are going to have to go up. It's an unavoidable situation. Reminds us of what happened back in 1983 when Tip O'Neill and Ronald Reagan, the two parties came together for that great compromise that saved Social Security. There are certain things that are going to force both parties to the table, and we're headed into that. So what can we do is the question. If we believe that tax rates are going to go up, and most people say they will, well, then we need to look at our portfolio and see how are we actually positioned now? Have we, for example, been following the drumbeat that's been going on for the last 50 years, telling us to put all of our money in tax-deferred accounts? Remember, deferred just means postponed. That means not only did we postpone the taxation on past earnings, but we also, get this, we postponed the calculation of the tax. And so what we did was we positioned ourselves to face whatever the heck is coming. And I personally think a train wreck is coming. I'm absolutely overwhelmingly convinced on this topic that there are hard times coming from a tax standpoint in this country because we have spent like drunken sailors, and particularly the last 3 years. When you look at what's happened since the start of COVID and all this Santa Claus behavior coming out of Washington, D.C., we've seen our national debt increase over 50% just in a matter of a couple of years.
Exactly. And who's going to pay for that?
Shocking. Yeah.
Everyone raise your hand.
How much do you love your kids and your grandkids? Because this is a really serious issue. I'm personally convinced that tax rates are going to have to double here in the next 10 to 20 years as a mathematical reality. And so the question is, where is your money now? If you are primarily in tax-deferred accounts, do you want to stay there? You don't have to. The truth is, we can do what are called conversions. We can get money out of tax-deferred accounts. We can pay the taxes now when taxes are at historically low rates and reposition that money into various tax-free alternatives. Now, we primarily think of the Roth IRA, which is a tremendous friend. Senator Roth, God bless him, for that legislation that gave us these after-tax investment options, these retirement accounts where we can pay the tax now when we are in a historically low tax environment and not have to pay tax on that seed money or the earnings in the future. Now, there's certain conditions, like you have to have the account for 5 years. You got to be over age 59 and a half to get it the earnings tax-free. But the bottom line is this is a completely legal, legitimate way to get your money legally off the radar. So we're not talking about reducing your future income. We're talking about maintaining the income you want in the future, just not have it be taxed. Because the truth is, it's not just your income tax. There's also taxation on your Social Security income. And there's also taxation that can, they don't call it taxation, but it feels like a tax. It feels like a penalty. It's called income-related monthly adjustment amount. It's IRMA taxes on your Medicare Part B premium. So there's actually 3 different kinds of penalties here that, frankly, most people quizzed on the street would never recognize.
Mm-hmm.
We've all heard of income taxes. Most people don't understand estate taxes. They don't understand taxation of Social Security. They don't understand this taxation or increased cost for Medicare Part B premiums. So there's a number of things we can do to reposition our current portfolio, and the Roth conversion strategy is one very, very powerful one that's available to all.
Well, and didn't something change with our taxes in respect to the Secure Act 2.0? Wasn't there a bunch of changes coming down, especially with the states and things like that, and inheritance and...
Yeah, there's a whole bunch of things that came out of that Secure 2.0, and it's actually been phenomenal legislation. It's come in a couple versions, but the thing I love about it is it's expanded these opportunities for tax-free accumulation of wealth. It's taken the pressure off where we don't, when we put money, for example, into the Roth 401k, now we have the Roth Simple, the Roth SEP, which is a simplified employee pension, certainly the Roth IRA. When we put money into these plans, we not only don't have to pay taxes on them in the future, but we're not compelled to take the taxes out in the form of required minimum distributions like we do with tax-deferred accounts. What does that mean? Well, it simply means that your money can continue to grow until such time as you need it, or if you want to pass it on to your kids or grandkids, well, let's do that. But let's do it in a tax-free form so that when they inherit it, likely during their peak earning years, they're not getting a double whammy of a tax. And so here's really where it gets to the heart of it is it's like anything else in life. We have to clarify what our philosophy is on this topic. If, for example, we believe that tax rates are going to go up, then what are we doing now to get out of that position from tax deferred into tax free? If our actions and our beliefs are not in alignment, well, that's the very definition of integrity, is having our actions and belief in alignment. If they're not, and frankly, most people, the vast majority of people who come to our public educational events, the vast majority of them come up and confess, oh my heavens, I wish I had heard this 20, 30, 40 years ago. It's like driving with one foot on the gas and one foot on the brake simultaneously. It just makes for a jerky ride, So we got to get clarity on our beliefs about a variety of topics, but certainly taxes, and then get our portfolio and our actions in alignment with those beliefs. And the Secure Act 2.0 made this a lot easier to do. We can accumulate a lot more on a tax-free basis. And there's that old saying that my mentor actually modified. There's an old saying from Judge Learned Hand, who was an esteemed judge on the federal tax court back in New York many, many decades ago. He basically said there's 2 sets of tax laws, one for the informed and one for the uninformed. Well, my mentor tweaked that a bit. My mentor said, no, Learned Hand was right. There are 2 sets of tax laws, but there's actually a third. He says one for the informed, one for the uninformed, and one for the informed person who doesn't do anything with the information.
It's very true. It's very true. We're giving you guys this information like on a platter, right? So we want you to be informed. We want you to be educated. We want you to act. We want you to be proactive. And listen, let's be honest, talking about taxes is not the most exciting thing. Usually it's overwhelming. It gets further and further down that sticky note of the to-do list. Even this time of year as we're kind of in tax season. So I totally get it. But if you're thinking about your money in the future and you're hearing us, about the deficit is overwhelming, which means taxes are inevitably going to have to go up, whether it's at the end of 2025 or, as you mentioned here, Mark, in the next, maybe 10 to 20 years. What is your plan to do that? And I think the first step, Mark, correct me if I'm wrong, is coming in and sitting down with you and saying, hey, look, let's take a look at my tax plan, both if you're still working or you're in the retirement years, and let's see how impactful Uncle Sam is going to be. Because at the end of the day, he could be the silent killer of your retirement if you don't have a plan in place. Am I right about that?
Oh my heavens, you're so right. And this is where we want to get the CPA involved too. I want everyone on your team, your legal advisor, your CPA, everyone around the table, because the truth is that the way out of a tax-deferred IRA is through the IRS. And so, meaning that at some point we're going to have to deal with the tax man. And so why not do that on our own terms at the timing when it's most advantageous to us? If we are, as we know, currently in a historically low tax environment, Why not pay the taxes now, get them behind us, and move on into what I call the promised land? It's that area we can legally be tax-free. And so there is a price of admission, and that's through the tax man. And so what we help clients do is strategize. Part of our roadmap experience that we create, these customized roadmaps that we do for people, is we help them navigate the tax brackets as well as this IRMA surcharge on the Medicare Part B premiums. And basically what that means is if you have tax-deferred money and you're willing to pay the tax on it now, you can convert it into tax-free Roth IRA status or Roth 401k status. But again, the price of admission is paying the tax now. Well, there's different ways to do that and different sources we can pay that tax from. And that's something we have to discuss on a one-on-one basis. But it's painful is the bottom idea. But since it's going to be painful at some point, why not deal with the pain in the least inconvenient and the least sensitive way possible? And so what we do is we manage those tax brackets. So we look at, okay, how can we do this, keeping you in a lower tax bracket and systematically piecemeal convert your portfolio over until we get to the point where ideally you're in a tax-free position in retirement. There's a whole movement out there called the power of zero, this idea that we can legitimately, legally get to a tax-free position in retirement. It's absolutely possible. But the onus is on us. We have to act. There's certain things we can do. And if you don't know how to do it on your own, it is absolutely legally possible if we act.
And we want you to act today. If you want more information about how to have that tax-free retirement, it's very simple. Just visit gyfinancial.com. That's going to do it for us here on Golden Years, a roadmap to navigate retirement, the podcast. We'll see you next time.
Investment advisory services offered through Golden Years Financial LLC, a registered investment advisory firm. Insurance is offered through Golden Years Insurance Services. These firms do not provide legal or tax advice. Consult your own legal and tax advisors before taking actions that may have tax implications. Investing in securities involves risk, including the potential loss of principal. Insurance contracts principal protection is based on the claim-paying ability of the respective insurer. None of the information contained on this website shall constitute an offer to sell or solicit to buy a security or insurance product. The information and opinions contained on this site or requested from this site are provided by third parties believed to be reliable, but accuracy and completeness cannot be guaranteed. They are provided for informational purposes only and are not a solicitation to buy or sell any of the products mentioned. Any media logos and or trademarks contained herein are the property of their respective owners, and no endorsement by those owners of Mark Cordner, Golden Years Financial, or Golden Years Insurance is stated or implied.